Coming up on Market to Market, wind energy proponents explain why government support cannot be a fiscal cliff casualty. Dairy producers contend with decreased milk consumption and increased competition. And we'll examine dramatic growth in the market for gluten-free foods. Those stories and market analysis with Naomi Blohm next.
Funding for Market to Market is provided by DuPont Pioneer, working with growers to match the right product to the right acre. Science with service, delivering success. This is the Friday, December 14 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. Midway through the holiday shopping season, a key government report this week revealed increased consumer spending. According to the Commerce Department, retail sales rose 0.3% in November, offsetting a commensurate decline in October. Auto sales increased 1.5%. Analysts say that and a 1.6% jump in home improvement store sales indicate consumers are beginning to replace vehicles and rebuild in the wake of Superstorm Sandy. The report offered mixed signals for the holiday shopping season. Online shopping surged 3% in their biggest gain in more than a year. But department store sales tumbled, and Americans spent less at discount stores like Walmart and Target. Some of the decline may be due to the storm. Still, economists are concerned that consumers may also be growing more cautious due to looming spending cuts and tax increases. With hopes dimming for a compromise averting the fiscal cliff, the White House and some congressional Republicans are setting their sights on a more modest deal. And while change is in the wind, proponents of wind energy explained this week why government support cannot be a fiscal cliff casualty. Iowa Senator Charles Grassley, a Republican, and Senator Mark Udall, a Democrat from Utah, led a bipartisan effort to extend the production tax credits for wind energy.
It's a jobs bill as well as a green energy bill.
Grassley authored the original wind production tax credit in 1992. Since then, the Iowa Republican says the industry has grown to support more than 75,000 U.S. jobs in more than 400 domestic facilities.
We're only about 4 years away from wind energy being mature and not needing the tax credit. So it would be foolish, wouldn't it, if it's only 4 years away from standing on its own and we got 20 years invested to complete that investment so we don't lose it all.
The subsidy was created to level the playing field with coal-fired and nuclear electricity generation, two groups critical of continued support of wind energy.
I think it's demagogic and intellectually dishonest. Besides, some of the people, like nuclear people that are lobbying against wind energy, we wouldn't have a nuclear industry if 50, 60 years ago we didn't have the Price-Anderson Act that provided insurance for nuclear because you couldn't get any private insurance to cover nuclear accidents. So the federal government put it up. So there's been all sorts of subsidies and still subsidies, and will be subsidies decades into the future for nuclear energy. So look at that inconsistency. They have no business taking on wind.
Grassley's home state of Iowa is the leader in wind energy production and component manufacturing. Iowa's turbines generate the equivalent of powering 1 million homes. The Hawkeye State gets 20% of its electricity from wind and trails only Texas in terms of installed wind capacity. Millions of Americans experience an adverse reaction to gluten, a protein found in wheat, rye, and barley. The affliction, known as celiac disease, affects about 1% of the U.S. population. According to the Celiac Disease Foundation, the disorder is not a food allergy, it is an autoimmune disease. While food allergies, including those to wheat, are conditions that people may grow out of, that is not the case with celiac disease. Medication typically is not required, but adopting a gluten-free diet means reading labels carefully and learning to identify ingredients that may contain hidden gluten. But that task is getting easier. Increasingly, the dietary regimen is being embraced by those who are not afflicted with celiac disease. And that's fueling dramatic growth in the market for gluten-free foods. Paul Yeager explains.
Navigating the aisles of a grocery store is an easy task for most shoppers. Meat, dairy, produce, no problem. But for an increasing number of consumers, finding foods that fit their gluten-free diet is difficult. Alex Lemke knows the struggle.
I found out I was celiac several years ago.
She's been gluten-free for several years after being diagnosed with celiac disease, a condition that damages the lining of the small intestine.
The first challenge is realizing that gluten is in so many products that you would have never, ever guessed. So that's frustrating. It just would surprise you where it turns up.
Gluten may seem easy to escape, but it's found in more products than just sliced bread and cereal. It turns up in unexpected items, from salad dressings to taco seasoning, and can even be found in the candy aisle. Emily Galazi knows this all too well. The 17-year-old was recently diagnosed with celiac disease and is the only one of her siblings restricted to a gluten-free diet.
It's really hard because you have to make 2 separate meals and you have to have 2 separate bags of chips, 2 just separate snacks. And it's hard to have breakfast in the morning because if you want toast, you have a different toaster.
Gluten, a protein found in processed foods made from wheat, barley, and rye, has always caused problems for those who suffer from celiac disease. But in recent years, many consumers who do not have celiac disease have also embraced gluten-free diets. A study by Packaged Facts, a leading consumer research firm, found that nearly half of those who buy gluten-free products do so because they perceive the products to be generally healthier. Other consumers use gluten-free foods as a method of weight management or because they think the products are of higher quality.
I have a lot of friends that choose to just follow a wheat-free lifestyle because they feel better, feel like they look better, it helps keep their weight down.
With greater demand for gluten-free products, the industry is booming, growing 28% over the past 4 years, and by the end of 2012, the U.S. market for gluten-free foods is expected to exceed $4 billion annually. Niche gluten-free brands are growing dramatically, and major food manufacturers are catching on, offering classic brands in new gluten-free options. Grocery chains like Midwest giant Hy-Vee are making the gluten-free shopper's trip to the grocery store a little easier. Hy-Vee has seen a 22% company-wide increase in gluten-free product sales in the past 2 years, according to Director of Health and Wellness, Julie McMillan.
So we've expanded these sections by a ton. Generally, we were anywhere from a few hundred items, gluten-free items, and now we're thousands of gluten-free items that we offer our customers.
She says that Hy-Vee listens to its customers to determine what their needs and wants are, even if that means redesigning the store.
We've also gone as far as separating it out for the consumers, so it makes their shopping experience a little easier. They're able to just go to one section in the store and make it a one-stop shop for them.
Each Hy-Vee store has different gluten-free offerings, depending on the demands at varying locations, but labeling is always important.
Over the past couple of years, Hy-Vee's really focused on making it easier for that gluten-free shopper. So we've added shelf talkers that really highlight the products themselves, and then we've pulled out the products from the mainstream line and put them into sections where we call out that specific section. So some things you wouldn't normally think about a gluten-free shopper missing would be like cakes and cookies and brownies. So we put them all into one section where the gluten-free shopper can easily find that chocolate cake that they've been missing out on.
After being told what they cannot eat, Lemke and Galazi say it's refreshing to see so many items they can eat.
They've actually allowed me to live a better, more enjoyable life. It's really easy now to come in and pick up anything I need and make just a normal traditional dish.
You know, they know that the product's safe and it is for sure gluten-free. They're not having to take the time to dissect the label because we're kind of doing that for them. Especially all the brownies and cakes and stuff, so you feel like if it's your birthday, you can just get that, or Christmas, you can just make a pie, so it's easier, makes you feel better that there's more options.
Packaged Facts estimates that only 10% of consumers purchasing gluten-free items do so because they or another family member have celiac disease. And that is prompting some critics to wonder if the growth in the gluten-free foods is just a fad. But Hy-Vee officials believe the trend is here to stay.
You know, when we see individuals that go on a gluten-free diet and have the results and the benefits, literally they're life-changing. So once they've had that positive impact, they're not gonna change their diet back.
For Market to Market, I'm Paul Yeager.
Next, the Market to Market Report.
U.S. retail prices declined last month, keeping the inflation boogeyman at bay. The Labor Department's Consumer Price Index fell 0.3% in November. Gasoline prices fell 7.4% month over month. That's their largest decline in nearly 4 years, and the move offset a 0.2% rise in food prices. Excluding the volatile food and energy sectors, so-called core prices ticked up 0.1% last month. But some items at the grocery store have gone up dramatically in recent weeks. The cost of milk, cheese, and other dairy products have risen 0.8% each of the past 2 months alone. And the dairy industry is weathering a not-so-perfect storm of higher feed costs, increasing competition, and declining demand.
Fewer consumers are hitting the dairy aisle at the grocery store these days, and that's translating to less demand for milk. While demand for yogurt, cheese, and other dairy products is on the rise, U.S. per capita milk consumption has fallen nearly 30% since 1975. One factor is increased competition. Another is the fact that children, historically large consumers of milk, make up a smaller portion of the population. Milk companies and retailers are looking to boost sales through a number of strategies, including the push of smaller, more convenient packages and healthy-oriented varieties, including protein-enhanced products aimed at fitness buffs. And there are other threats to what was once billed as nature's most nearly perfect food.
Welcome back. It's imitation milk making time.
I've got the soybeans.
I had them first. Kids, there are plenty of ingredients in imitation milk to go around.
The dairy industry is promoting natural aspects of its product to counter growth in alternatives made from soy, almonds, and even water. Retail dairy prices are not helping the industry's case. Last year, milk prices soared 9.2%. This year, the worst drought in 50 years pushed corn prices to record or near record levels. And the USDA reports 2012 dairy consumption is down 3.3%, the biggest year-over-year slide since at least 1975.
Hello, for $10,000. Who's... Excuse me?
The Got Milk ad campaign, started nearly 2 decades ago by the California Milk Processor Board, is leading the campaign to get milk back into the nation's refrigerators.
Always remember, real milk is the real deal.
The board also plans to display the real seal prominently on its products to distinguish them from plant-based products.
Citing diminished foreign demand for American wheat, the USDA predicted this week that domestic stockpiles will increase by 50 million bushels. And as you would expect, wheat prices headed south. For the week, March wheat lost 47 cents, and the nearby corn contract moved 15 cents lower. Soybeans bucked the bearish trend as the nearby contract settled Friday with a weekly gain of 25 cents. Nearby meal followed suit, moving nearly $15 higher per ton. In the softs, cotton rallied back above $75 this week with a gain of $1.30 per hundredweight. In the dairy market, January Class 3 milk lost 37 cents, while the deferred contract moved 22 cents higher. It was a strong week in the livestock sector, where February live cattle gained $2.20, nearby feeders advanced by $4.30, and the February lean hog contract posted a weekly gain of nearly $2. In the financials, the euro gained 230 basis points against the dollar, crude oil advanced by 75 cents per barrel, COMEX gold declined by $8.50 per ounce, and the Goldman Sachs Commodity Index gained 3 points to settle at 637.25. Here now to lend us her insights on these and other trends is one of our regular market analysts, Naomi Blohm. Naomi, welcome back.
Thank you.
It was a big week. The Fed made their announcement regarding the fourth quantitative easing measure that they're looking to take. What does that mean for the markets, both the equities and the commodity markets?
It means right now for the markets that the Fed is really, they're just trying to do their best to keep interest rates low. And they said that they're going to keep it low until mid-2015, which is a new jump for the marketplace. So they're trying to entice employers to hang in there and do their best, do hiring. You can try to plan on some sort of business aspect because interest rates will be low. They said that they will keep the rates low until unemployment either drops down to 6.5%, and right now we're at 7.7%, or unless the economic growth rate can climb a little bit more, or even for the inflation part, if it goes from 2% right now, if it gets up to 2.5%, that would be the point where they say we'll have to start raising interest rates. So until those things happen, we're going to continue to see the interest rates low. Bernanke, though, has also said that if the fiscal cliff happens, that this QE4 won't do much in the way of help. So there's a lot of pressure on these next couple of weeks for the marketplace to deal with all this economic crisis.
And with the way you look at things, what do you see? What does the market think is going to happen with this fiscal cliff? We've been back and forth, and we're getting close.
I think right now the market is assuming that if they don't get any sort of a new deal done by the next 2 to 3 weeks, that they'll do some sort of an extension just to limp us along and get us through. So there isn't any, I think, imminent reaction that's going to happen come January 1st, and the market is starting to show us that. It's starting to price some of these different scenarios in place. So I don't think we have to panic too much at the moment, but there's a lot of uncertainty yet, which rings true for many Americans, especially if the tax increases do happen, and things along those scenarios.
And that uncertainty, are we seeing that play out in the markets in any way or in one form or another? People sitting on the sidelines, or how are they reacting to the uncertainty in the markets now?
There is definitely a situation where the funds are not as active as they have been. They're more content to sit on the sidelines, and we're seeing that in some of the commodities with the volatility that comes and goes. So that's, I think, the biggest factor for now.
All right. Let's talk the grain complex here. We had the December USDA world supply and demand estimates come out, and we saw that move the markets a little bit. Can you explain what happened in the wheat market?
Sure. With wheat, the biggest thing is that the USDA increased the ending stocks. We went, a 50 million jump. That's huge. The market was only expecting maybe 10 million at most. So they increased the carryout levels in the soft wheat, also in the Kansas wheat, and it's because the exports just haven't been there. Most of the export market had been, of course, going to Russia and Ukraine, and then Australia as well. So now we just sit and wait and hope. And with the 50-cent price drop that we saw this week, once that major support broke, we now hopefully will see the exports pick up a little bit here. But $8 is where we're at right now in the Chicago March contract. That'll probably hold. We're oversold, so we should probably get a bounce back up to $8.50, but we just don't have that news yet to make the market go higher. We need either exports to pick up dramatically soon, or something bad would have to happen with the winter wheat crop, which, as we all know, in the western corn belt and the plains, it's dry. And if there's any winter kill damage, it's going to be a big factor, which can make prices explode pretty quick.
And when will the market start to price in that potential damage there in the western corn belt on the winter wheat? How soon will that begin to affect the market?
Likely January. I would say mid to late January would be the soonest that it could come into effect. And then also it'll time into the USDA report that comes in January too.
All right. And that should also be when we begin to see exports hopefully pick up or stay stagnant.
Absolutely.
In the wheat market.
Right.
Now, as we look to the future, are there any price points you see in wheat that you'd like to shout out beyond that $8.50 level here in the near term?
I would say that if bad things happen to our crop, or if our demand can pick up the pace, I do still feel that $10 is a possibility down the road this spring. However, if we don't have any weather issues and if exports continue to limp along, then we'll see prices stay near this $8 level for a while.
All right. Let's look at soybeans a little bit. The USDA report moved beans as well, different direction. We saw a little bit more of a bullish trend in beans. What's causing that? The
USDA cut ending stocks on soybeans by 10 million bushels, and that was somewhat expected, but what the tweak was that they increased the demand for beans for crush. And that was exemplified today in the crush report that came out. There's strong demand there. But what the USDA has not addressed yet is the export market. And the exports are running 30% ahead of years ago, and the USDA has not addressed it yet at all. So either one of two things will happen. In the January report, we'll get a really bullish surprise, or perhaps the USDA is saying, everybody just relax a little bit, because come March and April, when the South American crop becomes available for harvest, we're going to lose a lot of business then. So we'll just let the balance sheets be for right now because we might not have exports down the road. So there's a couple things to play off of. I would say for now, $15 is going to hold as some short-term resistance on the charts. $14 is a great support level, and we'll probably see the market just kind of zigzag in between those two levels into the end of the year and possibly even into the January report. And then otherwise after that, it's not until February when we have more of some weather issues from South America.
Okay, and you keep track of the weather pretty closely down there in South America. How have things been shaping up in the past week or two?
The Argentina weather has still been a little bit soggy, and their planting pace is behind normal. They're over 50% planted with corn and beans. So they're lagging, but it still isn't anything that's screaming red flags at this time. And in Brazil, some places a little wet, some places a little dry, but no major issues for now.
Nothing definitive currently. Well, let's talk corn. Corn, a little bit bearish this week. Again, due to the supply and demand report?
USDA kept ending stocks unchanged this week, and that was somewhat of a surprise. Some people were thinking that the carryout number might become just a little bit larger. And the reason it might be larger is because, of course, our exports have been so quiet lately. The one thing about the corn market still is that we are available to the world right now, and so we should see demand pick up. March corn has solid support at $7.15 as evidenced this week, and yet at the same time we don't have a reason to get above $7.75 with the March contract at this time either. Now, switching gears into the new crop, December, that market has been stuck between $6 and $6.40 for a few weeks now, and there's so many scenarios that can unfold there that as a producer you really have to sit down and figure out what is my strategy going to be if scenario A unfolds and we have nearly 100 million acres of corn planted, and we have just average yields. Or what is my scenario going to be and my price target's going to be in case we do have another drought. And so with all of the uncertainty out there right now, it's good to be really thinking about it. I'm still only 10% sold on that new crop because people have a hard time knowing for sure what their soil is going to yield this year with the drought. But you have to be thinking about it and be planning for anything that could unfold.
Get out that pencil and paper and
yes.
make the numbers work.
Yes.
Let's talk dairy. We had a little bit on that of a show earlier today. Where is the dairy market headed as we approach the end of the year?
It's in a mixed bag right now, and the futures price for Class 3 has fallen anywhere from 50 cents to $1 within the last few weeks, and it's because there is this huge supply of cheese out there. Demand for dairy is down, and it's not just here in the United States, it's globally. We're going to probably continue to see that for a bit as long as the global economy continues to be just in a little bit of a flux here. The cheese exports are down almost 38% from normal, and we have a lot of competition between Australia and New Zealand, which is what's also just keeping our prices at bay. The market is technically oversold. I think we'll see a bounce of 50 cents. So that'll take prices into the mid, maybe the lower end of $18, depending on which market and month you're looking at. But the other thing with the dairy market right now is that for almost the past 3 months, we've been culling 65,000 head a week. So the farmers in the United States are not doing anything to make production increase. And of course, with high feed prices, we're going to see things stay stagnant. So I think $18 will be where we're going to be hanging out at for a month or so.
Now, you mentioned high feed prices. Let's look at livestock a little bit. We saw a big bounce across the board in livestock this week. What's driving that?
Well, what we have with the livestock market, of course, is the expectation that the production is going to be down so much into first quarter. The funds are actually trying to come into the livestock market a little bit because of that play. If you look at cattle futures, the live cattle futures, they've got some solid support between like 130 and 132, and I think it's going to continue to hold because of that production being down so much. The one thing I would add is that demand, I feel, is really going to slip into first quarter because people are going to get their credit card bills for Christmas, and then they're not going to have too much money to spend necessarily on things like steak anymore. And also, we're probably going to see the demand fall, especially if the cliff happens, because then normal people making between $40,000 and $80,000 a year are going to have between $1,000 and $2,000 less a year to spend. And it doesn't sound like a lot, but when you're on a fixed income, it's substantial. So I don't think we're going to see those extremely high prices and bullish sentiment continue into the first quarter. I don't think we'll see things fall apart, though, either. but just mostly stay firm.
You mentioned live cattle finding their support. Where do you see feeders going in the near term?
They had a great rally this week, phenomenal. And between 152, 154 is I think where we're going to stay for another week. But based on the flag formation that just formed, we could see it shoot up a little bit higher yet into the new year, and that is absolutely a fundamental issue of the supply being so low.
And to that end, you're not so concerned with the demand issues yet that are affecting live cattle?
Not yet, no, but I think that's something that'll pop up probably at the end of January. People will say, oh, what happened?
Now, is any of this shift in demand going to help continue to help the hog market?
Yes, and it already has been happening because Mexico hasn't been buying as much beef from us, but they have been increasing their pork imports from the United States, and we're seeing that all over. Our pork exports continue to be stellar and continue to grow, and the pork production is also expected to be the lowest it's been in first quarter for years, so that's going to keep that market well supported also. But like the cattle market, if we don't have a lot of disposable income, people won't necessarily be buying higher priced proteins, but for now, pork is probably the leader as far as maintaining strength.
What sort of price points do you see having support there, not lean hog?
Yeah, on the feb hogs, I would say there's some support right now at 85, but below there would be 83, and at the higher end it's 88, and so we'll probably stay in that range into January.
January, February. As we look longer term, what factors do you see at play in the hog market?
Well, it continues to be a supportive factor, and if you look at the summer contracts, they're already trading up near $1. So the market's already realizing that supply is going to be down, and they're assuming that exports will be strong enough, especially with our dollar being low and expected to stay low. So I think that the hog market actually has a bright future ahead of it.
At the current prices we're seeing, what would you look for producers to start addressing their feed needs in 2013?
Absolutely. I've been working with some hog producers actually on that right now. So we're working on pros and cons too. Do we, book in actual cash needs now? And then if we do we buy a put on it or not? So lots of possibilities for that marketplace to deal with.
Great. Thank you so much, Naomi. Really appreciate you being here with us. That wraps up this edition of Market to Market. But if you'd like more information from Naomi on where these markets just may be headed, visit the Market Plus page at our website. You'll find expanded market analysis, audio podcasts, and streaming video of our program, as well as links to our Twitter feed and Facebook account, all free at the Market to Market website. Be sure to join us next week when we'll examine the impact of drought on Christmas tree growers. Until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by DuPont Pioneer, working with growers to match the right product to the right acre. Science with service, delivering success.